what are the most commonly overlooked deductions and credits?
Charlie, what do you think?
So it was a lot easier under the old tax bill. So the new tax bill makes things, for lack of better terms, simple for many, many people. It depends on where you live. We live in Texas, so I'm going to speak to that one. So one of the most commonly overlooked ones, in my opinion, would be the additional sales tax deduction. So you get a deduction based on just your income in general, but while you absolutely can, please don't, add up every single receipt you have for the entire year and say, this is my sales tax deduction. It's not worth your time. But you can do this. There are things that aren't normal in a year to do, which you're allowed to add to your given number. Buying a vehicle, having significant improvements to your home, the sales tax of that, you can add to that. So it'll be one of the easy ones to do. As far as commonly overlooked, and then
well, so let me chime in.
One. Yeah,
let me chime in. So the American Opportunity Credit is not necessarily it's not necessarily commonly overlooked, but there are some provisions in it that may be commonly overlooked. So to give you a quick review of the American Opportunity Credit, that is for college. It's the college and higher education related credits. There is a cap in how much you spend to how much you receive. You spend up to $4,000, assuming you meet all of the other qualifications, and you can get up to $2,500 in credits. It's broken up into two credits, a $1,500 credit and a $1,000 credit. But ultimately, it's about $2,500 worth of credits if you meet all the requirements to get it. I'm not going to dive into the requirements, but the key here is that many people don't realize a couple of factors here. Number one, if you've got any type of education savings plan, it may limit how much you can actually claim on that credit. Room and board under that credit do not fly, right? The car that you buy them, the clothes that you buy them, that kind of stuff. Or I say them like they're your kids, but also yourself too, right? None of that flies. But there are some supplies that actually can add to getting you to that $4,000 threshold. So let's use this, an example of, I'm going to nursing school and I'm going to a community college. They've got a nursing program and I'm spending about $3,000 a year, right? So I'm trying to do it on as much of a budget as I can. But I have to buy shoes, I have to buy scrubs, I have to buy stethoscope, I have to buy books, I have to pay for tests. Those required purchases actually can add to my $3,000. And let's say that ends up being $1,000 in total, where books these days are pretty darn expensive. And so I end up meeting the $4,000 threshold in order to qualify for the entire $2,500 credit. That credit is really not overlooked, Clark, but hopefully that gives you kind of some of that extra insight that there are pieces that are either misunderstood or overlooked.
Correct. Which I think is fair with a lot of pieces of things. But to say it in that way, I was having a hard time with what we're talking about today, the Tax Cuts and Jobs Act, the additional standard deduction, what everybody is getting on that is a lot of those deductions that we're referencing, it's an either or situation. And that's what's interesting about this whole piece is sometimes it's difficult to answer a question about a deduction of can I deduct this, yes or no. Even if I were to tell you yes, but then it makes no change to your tax return, was the answer really yes?
So let me, because I've got a specific way that I talk about this, Charlie.
Okay.
What I tell people is yes, meaning absolutely it is deductible, but it is not applicable based on your facts and circumstances.
Okay,
so deductible, yes, I have added it on your tax return.
Correct.
But it's not applicable. It doesn't change $1 on your return because you didn't exceed the standard deduction and that kind of stuff.
So you and your wife, you have donations to charity plus everything else. So house plus charity plus other pieces that you can throw in there, the sales tax deduction I talked about. Your total deductions are $19,000.
Sure.
Fantastic. You can absolutely deduct $19,000 on taxes. As we're talking and we talk about something else, he goes, oh, I can add this. Can I add this piece? Yes, we can.
Yes.
Now I get to $19,000. We're going to do an either or. $24,000 reducing your income or $19,000 reducing your income. Did the $1,000, was it applicable? Technically, no, because we use the 24. So in that way, it's less of a easy to answer question under the new tax law for many people, not for everybody, right? If once you beat that 24 that standard deduction, then yeah, absolutely everything is open. Let's not miss any of those pieces. We're not gonna miss them anyway, but we're not gonna make sure that they do apply at that point.
And the last one I'm going to mention to our business owners here, or to our self-employed or independent contractors, is the number one deduction for you in many industries is business mileage. And so that's something that we generally recommend that you use either an app or a mileage log or some type of strategy that you are tracking your miles. And I will give you one of my top 10 tax tips. Right, this isn't clickbait. Okay, so it really is one of my top 10 tax tips for independent contractors, self-employed folks, and business owners. Is that you set an alarm on your phone. So my wife is kind of a holiday junkie, right? Sarah loves holidays, every single holiday. Okay, and so we stay up for the ball dropping on New Year's every single year without fail. And so I have an alarm on my phone that goes off right like 2 minutes after midnight. And it's a recurring annual alarm on January the 1st at 12:02 a.m. My alarm goes off, and it's an alarm. It's a calendar item, right? But it's recurring. And so the title is to take a picture of my mileage. So what I do is I have my phone in hand because my alarm went off. I walk outside, I whip out my phone, and I take a picture of my odometer reading, right? Why do I do that? Because that moment happens to be the end of the previous year and the beginning of this year. By having electronic or digital evidence of my mileage, I can track my mileage from year to year. So I know exactly how many miles I drove to the mile every single year. That is absolutely in my top 10 tax tips, because that's the first question the IRS has in regards to business mileage is, what was your total mileage for the year, right? What's your odometer reading? Right. Oh, well, I've got this, evidence right here. See, right? And so in the scenario in which you argue that you had a ton of miles and the federal government says, we don't think that you can substantiate that. And you say, actually, here's photographic evidence that I put 35,000 miles on this vehicle this year. The average person drives 12,000 miles a year. Clearly, I'm above average, right? And so when you want to claim a bunch of business miles, that sets the stage so well. So that's top 10 tax tips there from Kevin, but hopefully that answers your question.